Hello Year 12s and welcome to this video on quality management strategies. This video is part of a series of 4 videos on the use of different kinds of strategies to optimize a business's operations. There are 4 things that you need to do while you're watching this video. The first thing is to take the very best Cornell notes that you can. The second thing is to use the pause and rewind functions. Use the pause function if you need to stop this video to take notes. Use the rewind function if you need to go back over any information contained in this video. The third thing that you need to do is to have your vocabulary sheets open in front of you so that you can write in your vocabulary sheets the definitions of key terms and of any other words that you may be unfamiliar with. And the fourth thing that you need to do is to have your summary books open in front of you. As we go through this video, I will give you some guidance as to what you should include in your summary books. When you've finished watching this video, please make sure that you read the pages from the textbook that are set out on this slide. And if you find any additional information from this reading that you think is useful, please supplement your Cornell notes with that information. You'll recall that operations management is the management of resources and functions within a business, that is, the management of the operations system, to transform inputs into goods and services, that is, outputs, in a way that minimizes the costs of production and maximizes the quality of those outputs. Accordingly, the aim of operations management is to transform inputs into goods and services, or outputs, in a way that minimizes the costs of production and maximizes the quality of those outputs. Put another way, the aim of operations management is to make the best use of the operations system of a business. That is, to optimize the operations of the business. By minimizing the costs of production and maximizing the quality of outputs, good operations management improves the efficiency and the effectiveness of operations and therefore maximizes the business's competitiveness. I've explained these concepts in a previous video. You should also recall that there are 4 types of operations management strategies that can be used to improve the efficiency and effectiveness of a business and therefore maximize the competitiveness of the business. These are technology strategies, materials management strategies, quality management strategies, and waste minimization strategies. In this video, we will be looking at quality management strategies. On this slide, I have set out the 2 learning intentions for this video. Please write these learning intentions down in your Cornell notes. The first learning intention requires you to be able to describe and evaluate strategies to improve the efficiency and effectiveness of operations related to quality. For these purposes, we'll be looking at 3 quality management strategies. These are quality control, quality assurance, and total quality management, or TQM. The second learning intention requires you to be able to propose and justify quality management strategies as ways of improving the efficiency and effectiveness of operations. By watching and taking notes on this video, you will be given the information that you need to be able to achieve these 2 learning intentions. In addition, in class, you'll be undertaking a number of learning activities that will require you to apply this information so that you're able to achieve these learning intentions. Before we look at the 3 quality management strategies, you need to understand what quality is. Quality refers to the degree of excellence in a good or service and the ability of that good or service to satisfy customer requirements. You need to take a broad view of quality. Quality certainly includes the characteristics of the actual good or service, such as what it looks like, its reliability, its durability, how easy it is to use, its features such as whether a watch is waterproof, its design such as whether an iPhone has a large screen, and its performance such as whether a car is fuel efficient. So, for example, customers will judge the quality of a good, such as a bike, based on factors like whether the bike is made of aluminium or carbon, whether the bike looks good, how comfortable the seat is, and how smoothly its gears change. Similarly, customers will judge the quality of a service, such as a haircut, on whether the haircut matches their expectations of a good haircut, whether the haircut took 20 minutes or 2 hours, and whether the barber cut the customer while giving them the haircut. However, quality also refers to other factors that are not directly related to the actual good or service, but that nonetheless make the good or service valuable to customers. These factors include things such as the availability of spare parts, for example, whether it's possible to obtain spare parts quickly and cheaply, and also the availability of after-sales service. For instance, whether the supplier will repair the goods if they malfunction within the first 12 months, or whether the supplier will provide free routine after-sales service for the first 12 months, as is often the case with new cars. In this video, we'll be looking at 3 quality management strategies. These are quality control, quality assurance, and total quality management, or TQM. The first quality management strategy is quality control. Quality control is the process of physically checking the quality of inputs, work in progress, and outputs to ensure that they meet specified quality standards and to detect and correct any defects. Look down the left-hand side of your vocabulary sheets, find the term quality control, and write this definition in there. You can see from this description of quality control that quality control is not just restricted to checking the quality of the output of the production process. Instead, quality control also extends to checks during the production process. For example, checks of the quality of the inputs that are used in the production process and checks of the work in progress that is produced during the production process. There are 4 stages in quality control. The first stage is for the business to establish the standards against which quality is to be measured. The second stage is for employees of the business to physically inspect inputs, work in progress, and outputs. Typically, only some of the inputs, work in progress, and outputs will be inspected. For example, in a cheese factory, quality control staff might taste randomly selected pieces of cheese to ensure that the cheese tastes right and that it's not too crumbly, too salty, or too rubbery. Clearly, it's not possible to test all of the cheese, or there would be none left to sell. The third stage in quality control is that the results of the physical inspection are compared with the quality standards established by the business. Where the quality standards are not met, then there are a number of options open to the business. One option is for the business to reject the defective inputs, work in progress, or outputs, that is, to discard them as waste. Another option is that if there's a concern that defective product has already been sold to customers, the business might recall some of its product. For example, you'll sometimes read in the newspaper that a pharmaceutical company is recalling a particular type of medicine because of concerns that the medicine has been contaminated. In such a case, customers should return the medicine and have it replaced. A third option open to the business is that if there's a concern that product is defective because of the operation of the production process, perhaps a robot in a car facility has been incorrectly programmed and is not properly assembling car engines, then production may need to be stopped while the fault is being identified. And a final option is that it may be possible for the business to sell the defective product as seconds at a reduced price. For example, if some of the donuts produced by a donut machine are not round, then those donuts can be sold as seconds at a discount to the price which is charged for round donuts. The fourth stage in quality control is to correct the processes or procedures so that the defect is not repeated, that is, so that the defect doesn't recur. Finally, the the business will need to periodically consider whether to adjust its quality standards so as to continually increase the quality of the output that it produces. Importantly, quality control is a reactive strategy in that it aims to detect and correct defects after they have occurred. The second quality management strategy that we're looking at is quality assurance. Quality assurance refers to the use of a system that builds quality into work processes by ensuring that those work processes meet predetermined quality standards. Look down the left-hand side of your vocabulary sheets, find the term quality assurance and write this definition in there. The idea is that by using quality work processes, this will prevent defects in the quality of the output occurring in the first place. There are 4 stages in quality assurance. The first stage is that standards for the quality of a work process are set by an external certification body. That is, an independent body publishes standards that need to be met for a work process to be considered of sufficient quality. For example, the International Organization for Standardization, or ISO, publishes standards relating to different work processes, including quality management, staff training, systems management, record keeping, and measurement. In fact, ISO has published over 22,600 standards which apply to the work processes of most industries. The idea is that if a business's operations system complies with these standards for work processes, then this should result in high quality output. The second stage in quality assurance is that the business changes its work processes to try to ensure that those work processes comply with the quality standards that have been set by the external certification body. The third stage in quality assurance is that the external certification body, for example ISO, audits, that is checks, the business to determine whether the business's work processes do in fact comply with the standards that have been set by the external certification body. The fourth stage in quality assurance is that if the business's work processes do comply with the standards that have been set by the external certification body, then the external certification body authorizes the business to use its logo on marketing and advertising material for the business's products. A business that is entitled to use an external certification body's logo may gain a competitive advantage, especially in global markets where the business may not be well known. This is because even though the business might not be well known, if the certification logo is well known, that is, if it's internationally recognized, then this will give customers confidence in the quality of the business's product, because those customers know that the product has been produced in accordance with standards set by a reputable body. Finally, a business will periodically need to consider whether to adopt higher quality standards for its work processes so as to continually increase the quality of the output that it produces. Importantly, quality assurance is a proactive strategy in that it aims to prevent defects occurring in the first place. This is very different from quality control, which is, as I've said, a reactive strategy. Quality control focuses on detecting defects through the physical inspection of inputs, work in progress, and outputs. Quality assurance focuses on using high-quality work processes so that output is produced without any defects in the first place. The third and final quality management strategy that we're looking at is total quality management. Total quality management, or TQM, is a commitment to excellence that emphasizes the need for continuous improvement, where all members of the business at every level are responsible for improving the quality of the products of the business. Look down the left-hand side of your vocabulary sheets, find the term total quality management and write this definition in there. Total quality management has 4 features. The first feature of total quality management is that it involves all employees. For total quality management to work, there must be a corporate culture in which each employee is committed to continuously improving quality and each employee is responsible for improving quality. The second feature of total quality management is that the focus is on the customer. The point here is that each team of employees, or each work group in the business, has a customer, and it is the responsibility of the work group to determine the needs of that customer and to satisfy those needs. This customer might not necessarily be an external customer, that is, a person who buys the business's products. Instead, the customer could be an internal customer. For example, in the Toyota factory, one work group is responsible for stamping the panels that will be assembled to build the car chassis. The customer for this work group is the team of employees that actually assembles the chassis. They need the panels to be delivered to them on time for chassis production, and they need those panels to be cut and pressed to certain specifications. It is the stamping work group which is responsible for meeting these needs, and they must treat the chassis assembly work group as their customer. The third feature of total quality management is its emphasis on continuous improvement. That is, employees are always looking for ways to improve quality. In this way, higher and higher quality standards are set and achieved. One way of doing this is through quality circles, where employees from across the business meet regularly to consider ways to improve quality. Any suggestions for quality improvement are then put up to management for management to consider them and, if appropriate, to have them implemented. The fourth and final feature of total quality management is that it is a proactive strategy in that it aims to prevent defects occurring in the first place. Total quality management prevents defects from occurring in the first place because under total quality management, all employees are committed to and responsible for improving the quality of the business's output and for ensuring that defects do not occur. In this sense, total quality management is like quality assurance, which is also a proactive strategy. However, both total quality management and quality assurance differ from quality control because, unlike total quality management and quality assurance, quality control is a reactive strategy.
So far, as required by our first learning intention, we have described the 3 quality management strategies, that is quality control, quality assurance and total quality management, that can be used to improve the efficiency and effectiveness of operations. However, our first learning intention also requires you to be able to evaluate these strategies. This means that you need to be able to explain and weigh up both the advantages and the disadvantages of the use of these strategies. Now remember, an evaluation is more than a description. In an evaluation, you need to weigh up the advantages of each of these quality management strategies against their related disadvantages, using words of difference such as however, on the other hand, in contrast, whereas, and while. In this table, I have identified the advantages and disadvantages of quality control, quality assurance, and total quality management. Please include this table in your summary books, together with notes from the discussion which follows, where this helps you to better understand this table. A significant advantage of quality control, quality assurance, and total quality management is that they all increase the quality of output by reducing defects. Because customers are receiving a higher quality product, that is, a product that is free from defects, those customers will be more satisfied with the product. The difference, though, is that quality control is reactive, whereas quality assurance and total quality management are proactive. This means that quality control aims to detect and correct defects after they occur, whereas quality assurance and total quality management aim to prevent defects occurring in the first place. This highlights a disadvantage of quality control, which is that it is still possible that poor quality output will be provided to customers because not all of the output might be tested. For example, as I've explained in the context of the cheese factory, it's not possible to test every bit of cheese that is produced. Another advantage of these three quality management strategies is that they reduce the waste of inputs. By reducing the amount of defective products, this reduces the amount of inputs such as time, labour, raw materials and component parts that would otherwise be wasted because the output that they produce is defective. On the other hand, the major disadvantages of these three quality management strategies relate to the cost and time that is associated with them. Let's look first at quality control. Because quality control is a reactive strategy, that is, it only detects defects after they have occurred, the costs of quality control include the costs of dealing with defective products. These costs include the following. First, the cost of the inputs, such as time, labour, raw materials and component parts, that have been used to produce the product are wasted where the business rejects the product because it is defective. These inputs cost money. For example, where cheese produced by the cheese factory has to be thrown out because it doesn't taste any good, then the time, labour and raw materials such as milk, salt and colouring that were used to make that cheese are wasted. Second, there is the cost of the additional inputs that have to be used where the defective product is reworked to fix the defect. For example, if quality control reveals that the labels attached to the packaging used for the cheese contain an incorrect use-by date, then it will take time and labour, as well as other inputs, such as new labels, to remove the incorrect labels and attach the correct labels to the packaging. Third, even if the business can sell the defective product as a second, it will generally have to sell that product at a discount because it is not of sufficient quality. This is a cost to the business in the form of lost revenue. The business can no longer sell that product at full price. And fourth, if production has to be interrupted while the cause of the defect is identified and fixed, then this is also a cost to the business in the form of reduced production. While the production process is interrupted, the business cannot produce products for sale. Finally, if the business decides to recall some of its products from sale because it discovers a defect in its products which suggests that there may be defects that have gone undetected in products that have already been sold, then there is a possible cost to the business in the form of damage to its reputation with customers. For example, there have recently been recalls of cars that may have defective airbags. And this may have damaged the reputation of the car manufacturer in the eyes of potential car buyers who will be concerned about safety. In some cases, these defects were only discovered when the car was involved in an accident and the airbags failed to operate properly. It's also possible that a regulatory agency, such as the Australian Competition and Consumer Commission, will fine the business for selling defective products. This is another cost. Apart from the costs of dealing with defective products, quality control has two further disadvantages. First, it costs time and money to train and employ the staff who inspect the inputs, work in progress and outputs as part of the quality control process. And second, the actual process of inspection takes time and can result in delays to the production process. Turning now to quality assurance, a disadvantage of quality assurance is that it is expensive and time-consuming to implement. It's expensive to implement because the business needs to pay the costs of changing its work processes to meet the externally set quality standards, the costs of having these work processes audited by the external certification body, and the fees that the external certification body charges the business for allowing the business to use its certification logo on the business's advertising and marketing material. Quality assurance is time-consuming to implement because the business must ensure that its work processes meet the externally set quality standards. And finally, turning to total quality management. Total quality management, like quality assurance, suffers from the disadvantage that it is expensive and time-consuming to implement. In addition, total quality management relies on the participation of all employees. For total quality management to work, the corporate culture of the business must be one in which each employee is committed to continuously improving quality, and each employee is responsible for improving quality. However, employees must be given the skills that enable them to do this. This means that employees need to be trained in skills such as problem solving and customer service, remembering that, for the purposes of total quality management, each work group has a customer, whether that customer is an external customer or an internal customer. Training not only costs money, but requires employee engagement. Our second learning intention requires you to be able to propose and justify quality management strategies as ways of improving the efficiency and effectiveness of operations. To do this, you need to be able to specifically relate the use of quality management strategies separately to efficiency and effectiveness. That is the purpose of this table. Please include this table in your summary books, together with notes from the discussion which follows, where this helps you to better understand the table. All I've done in this table is to take the relevant advantages of quality management strategies from the previous slide and relate these advantages to both efficiency and effectiveness. By keeping the colour coding, I'm hoping that you can see that you only need to learn the information once to be able to answer both a question that requires you to evaluate the advantages and disadvantages of quality management strategies, and a question that requires you to justify quality management strategies as ways of improving the efficiency and effectiveness of operations. How do quality management strategies improve efficiency? Well, remember that when we're talking about the efficiency of an operations management strategy, we're focusing on how that strategy increases the value of output and reduces the cost of inputs. The first way in which the three quality management strategies, that is quality control, quality assurance, and total quality management, increase efficiency is by increasing the quality and therefore the value of the output. This is because by reducing defects in the output, customers value that output more highly and they are more satisfied with the output. Remember though that of the three quality management strategies, quality control is the least satisfactory because it doesn't necessarily detect all defects. The second way in which the three quality management strategies, that is quality control, quality assurance, and total quality management, increase efficiency is by reducing the cost of inputs. This is because these quality management strategies reduce the amount of defective products and so reduce the waste of the inputs, such as time, labour, raw materials and component parts, that are used to make those products and that are wasted where the product has to be discarded or rejected because it is defective. We can now look at how the three quality management strategies improve effectiveness. Remember that effectiveness refers to the extent to which the relevant operations management strategies, in this case quality control, quality assurance and total quality management, contribute to the achievement of business objectives. I have chosen 3 business objectives for this purpose. These are the business objectives of increasing profit, increasing sales and increasing market share. Well, how does the use of the 3 quality management strategies contribute to the achievement of the business objective of increasing profit? They do this by increasing revenue. This is because the 3 quality management strategies increase the quality of the output by reducing defects in the output. As a result, customers will be prepared to pay a higher price for that output. Because revenue is increased, profit will be increased. The second way in which these 3 quality management strategies increase profit is by reducing input costs. These 3 quality management strategies reduce input costs because they reduce the amount of defective products and therefore the amount of inputs, such as time, labour, raw materials and component parts, that are wasted where the defective products are discarded or rejected. Inputs cost money, and so wasting inputs costs money. By reducing the inputs that are wasted, the business is therefore reducing its input costs, which in turn increases profits. Well, how does the use of the 3 quality management strategies contribute to the achievement of the business objectives of increasing sales and increasing market share? They do this by increasing the quality of the output by reducing defects in the output. Where the business produces high quality products, then more people will want to purchase the products of the business, which increases the sales of the business. And where the business produces higher quality outputs or products than its competitors, then the business will attract customers away from its competitors, which in turn will increase the market share of the business.
That brings us to the end of this video. As a result of watching and taking notes on this video, you should now be able to do 2 things. The first thing is to be able to describe and evaluate strategies to improve the efficiency and effectiveness of operations related to quality. For this purpose, we've looked at 3 quality management strategies, being quality control, quality assurance, and total quality management, or TQM. The second thing that you should now be able to do is to propose and justify quality management strategies as ways of improving the efficiency and effectiveness of operations. This video has given you the information that you need to achieve these 2 learning intentions. However, in class, you'll be undertaking a number of learning activities which will require you to apply this information, and that also will help you to achieve these learning intentions. Don't forget to read the pages from the textbook referred to on the first slide, and if you find any information from that reading that you think is useful, please supplement your Cornell notes with that information. Thank you for your attention.